It was a cosy club to which only certain analysts were invited until the whistle was blown. This is Tonight, and I'm Bruce Whitfield. Tonight, we look at the shadow trading and how certain analysts have been making money from it, but should it be relying on their skill to make money? And also public information, not secret backroom meetings. Joining me is Owen Nkomo. He's an executive partner at Inkunzi Investments, and Stuart Theobald, the chairman of Intellidex. And this all goes, Owen, to an analyst conference call that was called by Aspen, to which you were not invited.
Well, that's very interesting. I mean, Aspen actually does not even know that we exist, which is okay because there's like millions of people that hold the shares in this business. So it is okay that a certain number of people are invited into the meeting, but all we worried about is the fact that the kind of information that then got disseminated in the meeting, some of it was not publicly available to those that did not attend and those that did not tune into the conference call. So it's okay to invite people, but make sure that the information you disseminate is not going to be share price sensitive, especially if some people are not parts of that meeting. Those are simple JSE rules.
Absolutely, and I mean, but you're not complaining as an institutional investor, you're complaining as a tiny minority investor, in the same way as I, in my individual capacity, if I held shares in Aspen, would also not have been privy to that information. I would have expected to see any price-sensitive information first released on the Stock Exchange News Service with a little note saying, if you want to dial into the conference call, please do.
Yes, most definitely. That's what needed to happen. And I think that it's quite unfortunate, the turn of events. Probably, in my view, maybe it was during the meeting, someone asked a question which management didn't take time to think about whether or not this question, by responding and disclosing some of the information, they have been making some non-publicly available information available to a select few people that were in the meeting. So that is a big challenge that I believe this whole thing has caused. Many people do want to discuss this, but I believe, for whatever reasons, they're feeling uncomfortable mentioning it. All I'm saying is that let's reiterate the rules of the JSE when it comes to disseminating information. If there's any new information which is share price sensitive, definitely that information must be transmitted through the SANS news services that the JSE runs. And then, if you don't get access to that, it's quite unfortunate. But the belief is that most participants who have got access to technology will have received that information, and then they're in a position to make informed decisions. But if the flip side as well, not the flip side, but the add-on to the circumstance that says there's only a few people that are in the meeting, is to say those people, they get this information and it's not publicly available to a broader participation that invest in Aspen. They then go and act on that information.
And that's when we see the share price movement, 6% down last Friday in a single day. Stuart Theobald in London, how big a deal is this? Should Aspen feel embarrassed, or is it a little bit more serious than that?
I think certainly embarrassment is warranted. There might also be some more serious consequences. I think it looks like two potential errors were made here. One was to have not invited more broadly people to listen into the conference call, such that it would have been a genuinely public event. The second issue is whether material price-sensitive information was conveyed in the call. Now, I've listened to the call. It's still available. People can dial in and listen to the recorded version of it. And to my mind, the call did contain material that I certainly would have wanted to have if I was considering investing in Aspen shares. And that's the definition of materiality. I think it's slightly less clear whether the information qualifies as specific or precise. So that the wording of the rules use that terminology, specific and precise, which in the past has really been interpreted as saying specific means exact numbers that are conveyed that contain profit or other information that is material to the price of the shares. I think that's where there's a little bit of a grey area, and it comes down to a matter of interpretation. So it's not clear to me that Aspen is going to be in trouble on that front.
But isn't this part of a bigger issue, Stuart, when it comes to the way in which information is disseminated? There are the large institutional investors, which by their very nature have better access than Mrs. Jones, who lives in Lusikisiki, who might have herself 3 Aspen shares as part of a portfolio she set up 20 years ago. She doesn't have access to the same information as the guys at Old Mutual, Coronation and Sanlam have. Is there not a broader issue here about access to information and the way in which companies behave toward their big institutional investors, favoring them over the little guys?
I think this is very tricky conceptual ground. We want professional investors to be engaged in the market, people who spend their whole time focused on analyzing companies. That leads to better social outcomes because their analysis hopefully figures out mispricing. That leads to better efficiency in markets and so on. Professional investors are always going to have the edge. They have the training, they have the time to spend analyzing companies. Now, how should companies themselves treat that kind of professional investor compared to your average retail investor like you or me? I think that's difficult. I think companies certainly have an obligation to treat all shareholders fairly. So they should always put information out into the public domain that's going to be material to me as a retail investor. But what's material to me is probably quite difficult to somebody who spends every waking hour analyzing a particular company. That person might realize that the color of the CEO's tie is material, whereas that would be completely invisible to me, not knowing a company very well.
Sure.
So I think it's conceptually difficult. I think I can't blame companies who have limited time available for allocating their time to people who are doing the most work on those companies and who in turn produce information that's consumed by a large number of big institutional shareholders. I think in the realistic world, it's always going to shake out that way. Companies have to decide how to allocate a scarce resource, which is their time. And I can't think of a more rational way to do it other than to allocate it towards those shareholders who are the biggest investors. But that said, they do certainly have an obligation to provide information to everybody fairly and equally to the extent that they can.
Absolutely, Owen. I mean, as I understand it, and you would be closer to this than I, there wasn't a specific profit forecast. There wasn't a specific mention of profit. The company spoke in generalities about profit margins coming under pressure, about the fact that the market was becoming tougher. It was becoming more difficult to do business. Those are fairly generalized comments. Had they put that information onto the Stock Exchange News Service, it could have been interpreted as a profit warning, and the damage to the share price could have been even more severe, surely.
You see, there was some elements of the information that was shared that I believe that were very specific. For example, the increase in costs, for example, in light of them trying to bring on the plant they have in France online. They did specify that we're now going to see more than a 200 million cost on bringing the plant in France back to line. So obviously they're not giving a quantification of that. And I have seen since announcements that have said, just so investors are aware out there, the environment continues to get tough, and we think that things are not going to be, we're not going to meet our targets or something like that. Without specifying the numbers, something like that could have been written. But unfortunately, there was a mention of the margins. Businesses across the platform had some challenges with the distribution network.
Would you be as irritated? Had you not got a call from Aspen Investor Relations last Friday morning and they'd said to you, hey, Owen, we believe you guys are a small house. Congratulations. It's nice to see that you guys are doing business. There's a conference call happening at 11 o'clock this morning. Why don't you dial in if you're interested?
Look, it would have been useful for us to get invited or to tune in. And I must say that generally speaking, you'll find that the event itself was publicized to the people that are participants in the investments community. But what I'm saying is, if I had been part of that meeting and I thought about the information that was disseminated and I realized that not everyone has got access to that information, I was not going to trade with that information. Because that brought us definitely on inside information. And you spoke earlier about the small investor in Lusikisiki. We actually got an email from an individual client that said, but what's going on here? And I've been looking at the news and it appears some people sold these shares before they announced that, before information was disseminated that things are getting worse. So in essence, what I'm saying here, Bruce, is technically management probably got caught off guard and responded and issued information that probably on second thoughts they would not have issued to a closed meeting.
Stuart, Theobald, you'll remember the incident probably more than 10 years ago now where Jens Montanana was asked from Datatech. He was asked a specific question by an analyst and there wasn't a verbal communication, but he nodded his head in response to a question about future profitability. And there was a huge row about that. Is Aspen going to face a similar sanction, or will the JSE simply write this off to experience as a reminder to all of us that all companies need to behave better in future?
Well, I think that case is a very interesting precedent to look at. So in 2000, that was over a breakfast. So there was one analyst meeting with two directors over a breakfast involving three people. And that analyst specifically asked the directors, is the company going to meet its profit forecasts? And as you say, they didn't verbally answer, they just shook their heads. That analyst then went away from that breakfast and phoned his 5 biggest institutional clients and told them that information. Those institutional clients then sold, and the share price lost 32% on that day. Now, bear in mind, in that case, there's an extremely small audience, and the information is very tightly controlled. So those 5 investors who were given the information had a significant advantage over everybody else in the marketplace. Now, and yes, that led to serious consequences. The directors got fined R1 million, and Data Securities, which was the employer of the analyst, got fined 24 million rand. Now, in the Aspen case, it's quite different. There wasn't a specific controlled individual who was providing that inside information to specific people. So it's much harder to identify who might have profited in this case. In that case, it was very clear who had profited because Data Securities gained an advantage by providing inside information to its specific clients. So there was wrongdoing that was very clear to identify. I think the JSE would have a really hard time looking at the trade in shares around this thing when there were 56 different institutions who were on that call. Now,
Stuart Theobald, I need to wrap up this evening, and thanks very much for coming through. Stuart Theobald making the point that this is a considerably more complicated case. Stuart Theobald in London, thank you. Owen Nkomo, Executive Partner at Inkunzi Investments, in studio with me in Johannesburg. Stuart Theobald, the Chairman of Intellidex, live to us from London as well. Thank you for watching. There'll be more tonight, tomorrow. Until next time, bye-bye.